What's going on, everybody? This is Justin, the Flipping Accountant, here with another video for you. This time we're going to be doing some tax tips and sharing some different ways to try to help you with your taxes this year. And this is being recorded in April 2020. This was for the FY19 tax year. And I should have recorded this video a month ago or 2 months ago, but considering everything that's going on with quarantine and the fact that the filing date has been pushed back from April 15th to July 15th, means that there is now more time to get your taxes done. So I wanted to share some different tax tips and things to help you out. If you're a Amazon seller, eBay seller, online seller, merch, Mercari, OfferUp, I mean, a lot of these tips are gonna apply to you if you have a small business or if you just sell products online. But generally my audience is focused on the FBA and Amazon and eBay sellers, but this applies to a lot of businesses as well. Couple disclaimers. First, I am a CPA, which stands for Certified Public Accountant, and I have a license and I'm active in the state that I practice. But this video is meant to be general information only. This is not specific tax advice for you or whoever's watching this. This is not individual advice from me to you. This is just general advice and things to look out for. And if you're looking for general advice, you should hire a CPA or tax professional to help you with your taxes if you have specific questions. So again, this is just general information. This is not specific to your situation. You'll have to inquire for stuff specific to your situation. All right, so let's jump right into it since we've got that fun part out of the way now. And we'll start with number one is a 1099-K. So a 1099-K is a form that you'll receive from a platform such as Amazon or eBay if you met two thresholds. You had to have had 200 transactions in a calendar year and $20,000 in retail sales. So it's my understanding that you have to have hit both of those metrics. 200 transactions and $20,000 in sales. If you do that, Amazon or eBay will generate a 1099-K form and they'll either mail it to you or you can download it off their website. So, I've seen this question posted on Facebook and different reseller groups and Facebook groups, and people say, well, if I don't get a 1099-K, my income is not taxable. Unfortunately, that's not true. Any income that you make from reselling or side hustles or anything like that, it is taxable and you do need to report it to the IRS, even if you don't get a form saying this is exactly how much you sold and this is what you made. Any additional income beyond, whatever income you make normally is taxable and you do need to report it. So that's number one, that's the 1099-K for eBay or Amazon or other platforms like that. Number two, just something I just want to talk about, a little, something that I wanted to explain is people don't, from my understanding, most people don't understand the difference between a tax credit and an expense. A tax credit is something that you get a dollar for dollar benefit on your taxes. So let's say if you get a $1,000 tax credit on your taxes, that will be $1,000 that will either reduce your taxes or that'll be $1,000 that you would get back. Now, an expense lowers your taxable income times the tax rate. So hypothetically speaking, if you spent $1,000 on a qualified expense on your taxes and you were in a 30% tax bracket, if you claimed everything and everything was calculated correctly, 1,000 times 30%, you would reduce your taxes by $300. $1,000 times 30% would minus out $300. Now, why am I bringing this up? Because I think that there's a misconception or a misunderstanding out there about different types of programs and courses that you can buy, and people saying, oh, well, if you spend $1,000 on my course, you're going to save $1,000 on taxes. That's not true, because generally an expense is only going to save you a percentage using your tax rate. It is not going to save you that entire amount. So claiming your expenses is good, keeping track of your expenses is good, all of that's great, but I just want you to understand a credit and an expense are not the same thing. Okay? So number 3, something that I think everyone needs to take advantage of if you're able to and you have your own home is a home office deduction. So if you have a space that is dedicated to just doing your business, whether that's reselling or Airbnb or other side hustles, stuff like that, if you have a space that is devoted to business and not used for other purposes, regularly and exclusively used for business, then you should be able to claim it as a home office deduction. So there's a couple different ways you can calculate it. The most popular way is the square foot of your room divided by the square foot of the house. So for example, if this room was 200 square feet and my entire house was 1,000 square feet, 200 divided by 1,000 would be 20%. So that would be the percentage that I would claim as a home office deduction. So if you're able to, this is a great deduction. It'll really help you reduce your taxable income, because if you're using this space exclusively for business, and there's no reason that you shouldn't, take that deduction. Sometimes people are afraid to do it. You don't want it to be too high, and whatever calculation you use, and there are other ways to calculate it. You can Google it, look into home office deduction, but you want it to be reasonable. You don't want to say, oh, well, I use half of my house exclusively for my business, because that's not realistic. You have a kitchen, you have bathrooms, you have dining room, bedrooms, and all that stuff. But whatever you do, just be able to support it and make sure that it's reasonable for the circumstance. So the next thing is the business use of vehicle. And you can use one of two methods. You can use the actual cost method, or you can do a mileage rate method that is provided by the IRS every year. And the mileage rate generally changes every year, whether it's a cent or a couple cents. It's good to know what the rates are. So for the FY19 calendar year, the mileage rate was 58 cents per mile. So if you drove 1,000 miles and you're able to write off 58 cents, you would save $500, or you would have a $580 deduction to use on your taxes. So this is a rate that the IRS has calculated. They take into account, what they think your expenses would be, what they think your gas rate would be, your miles per gallon, the depreciation of your car, all of that stuff. So, but it's one or the other. You can't say, well, I'm going to do the actual cost and I'm going to, take $1,000 worth of expenses that I had for my brakes and my tires and all that stuff, and I'm going to do mileage. It's one or the other. You can't do both. So if you keep track of your receipts, you can look and see, you can figure out if it would be better to do actual expenses versus mileage. I just like to do mileage. I think it's easier to keep track of, and it's the rate is usually pretty generous. So each year the rate changes, but this year it was 58 cents per mile. So going into that, number 5 is to track your mileage. So if you're going to claim the mileage rate on using your vehicle for business purposes, then you want to have an accurate logbook or tracking system to prove how much mileage that you took or how much mileage you used for your business. So there's a few ways you can do that. You could use a logbook of some kind. You want to have either a notepad, a book, or there are different kind of apps that you can use and download for this purpose. A couple different apps that are out there that I believe are free are MileIQ or Everlance. So it's basically just like when you get in your car, you just start the app and say, I'm starting, here's my starting mileage. At the end of it, you just plug it in and type in your ending mileage and whether your trip was business or personal, and then it keeps track of all that stuff. That makes it a lot easier. Then you've got some kind of digital record that you can keep track of until the end of the year. Or if you want to use a paper logbook, that works too. But you want to have some kind of substantiating documentation to prove, if you ever were audited, that yes, I claim 12,000 miles, here's all of my support for that. And you want to make sure it's reasonable. And you want it to be accurate as well. You don't want to be embellishing the numbers or anything like that. That's why it's important to keep some sort of a log, whether it's a book or using an app. So a lot of trips can be used for, your business. If you think about trips that you make just about every day, if you're selling packages or if you're, selling stuff online, when you go to the post office, when you go to drop off your packages at UPS or FedEx, If you're going to purchase more inventory from somewhere, if you're driving to Walmart or Target looking for inventory to buy, those are trips that you're sourcing. If you're heading to buy supplies for your office, headed to Office Max or, office, store like that, those are all trips that you want to make sure that you're keeping track of because those are business related. I try to make sure that I'm combining my trips as much as possible because I want to make my life as tax deductible as possible. So if I have a personal trip, but I have, if I have a business purpose, well, then I will just try to make one trip and make sure I'm keeping track of my mileage and keep track of, this was for business, this was for personal, and all that kind of stuff like that. But it is important to do your best to track your mileage on your business trips. So another thing is business expenses that people forget can be claimed is number 6 is a portion of your internet and phone charges you could claim as a business deduction. So if you're an online seller or if you're a small business, most likely you're using the internet or your phone to help you with that business. If you're doing stuff at home, shipping, packing, printing off labels, if you're using your phone, sourcing while scanning, stuff like that, it's very reasonable to use a percentage of your phone bill as a business expense. And that, that definitely helps out. If your phone bill is $100 a month and you charge 50% to your business, well, that's, $600 a year that you can write off as a business expense, and you're saving money that way, which it's going to reduce your taxable income, which is going to reduce your taxes that you have to pay at the end of the year. So that's just another thing, think about your internet or your phone, and if you're using those things, just come up with a reasonable percentage. How often do you use your phone? How often do you use your internet for your business? And make sure you use that on your taxes as well. So number 7 is business meals. Business meals are 50% deductible. And a couple of things that you have to note is they have to be ordinary and necessary, and they're not lavish or extravagant. Part of the IRS Publications 463 that talks about business meals, it says, you can deduct the cost of meals if it is necessary for you to stop for substantial sleep or to rest properly to perform your duties while traveling away from home on business. So this would generally apply to if you're on a sourcing trip or if you're headed out of state, doing something like that. If you're just driving around town to your house, more than likely this is not going to fall in that category. But if you're going on a long road trip, going to several states, or making deliveries, stuff like that, business meals are 50% deductible. So just make sure that you keep track of your receipts and just keep track of it somehow so you have some kind of a record when you do your taxes for the following year. So number 8 is office and shipping supplies. So these are different things that I use for my business, but I've got some examples here for you. You've got boxes, pens, markers, labels, tape, stickers, polybags, scales, bubble wrap, warning labels, tape gun. If you've got tape gun, clear tape, weight scales, your warning stickers that you need to put on items for FBA, stuff like that, bubble mailers, or if you have a fancy heat gun like I do, like I picked this up at, I think it was a thrift store, these are all expenses that you're using for your business to do your business. So you want to make sure that you're keeping track of those things because those are expenses and those will help reduce your taxable income at the end of the year as well. So another thing that you could do if you're interested in learning is, you could try to learn something or take a course or expand your knowledge base. You could take a course, go to a workshop, or go to an event, and this would fall under Schedule C for self-employment, and you must prove that it maintains or improves your skills required in your present work. So not everything would fall in this category, but some things that you could go to if you're going to a conference, if there's an eBay conference or Amazon conference or something like that, and you're able to prove that it substantially helps your business, then that would be something that you could write off as well. If you're interested in more information on that, you can look at IRS Publication 970, and that'll have more information in there. So the last thing that I want to talk about for tax tips is to get yourself organized as best you can. I like to use a digital scanner. This is a Brother digital scanner that I use right here to scan my receipts and try to keep everything organized as best that I can. And this will create a digital record, so then I have all of this saved on my computer as a backup in case, in case my computer goes down, or if I want to toss the receipts, I still have a digital record to prove what I paid, what I used it for, and all that stuff. Or you could hire a bookkeeper. Just because you're into reselling doesn't mean you're going to be into bookkeeping, and bookkeeping is a lot of work. If you were to hire a bookkeeper, that would be a business expense, and that would be something else that you could, use to write off at the end of the year, and then you wouldn't have to worry about doing all this stuff. Not everybody enjoys how much fun it is to keep track of records, but some people do, some people don't. But that would be something that that could be an expense for you that's tax deductible at the end of the year and could save you a lot of headache when you're doing your taxes. So again, this was 10 tax tips, topics that I wanted to talk about for Amazon, eBay, reselling. Let me know if you have any questions. Again, this is just general information. This is not individual information for your situation. If you have specific questions that you would like to have answered, make sure you hire a tax professional or somebody that can help you with that. And I hope this helped. Please let me know if you enjoyed this. Leave me a message, like, comment. Please subscribe if you like this video and you'd like to see more stuff like this. And I enjoy doing this and I enjoy helping out. So if there's anything I can do to help out, just let me know. So thanks again for watching, and my name is Justin, and we'll talk to you soon.